The London Stock Exchange is on the verge of calling off a potential $31 billion merger with exchange platform Deutsche Börse after European regulators tried to step in. Could there be another deal, though, in the works? Waiting in the wings. Charlie Gasparino, break it.
What sources are telling the Fox Business Network is that LSE executives are telling bankers that interest remains in purchasing the exchange if the Deutsche Börse deal falls through. To point out, it's not totally done yet. They're going to try to fight this. They're going to say that Deutsche Börse, the European regulators, the EU regulators, essentially stop this thing. What they're asking for in terms of concessions is way too much. They're going to try to ratchet it back. If they do, they'll go through with the deal, obviously. But if they don't, what they're saying, there's still interest in the exchange, the London Stock Exchange. And here's what bankers are saying. They're saying that the two likely bidders on this thing, if it does occur, and there's a whole bunch of people that could buy them, like NASDAQ could buy them, the CME theoretically could buy them,
why not?
CBOE. But the two that they think are the most likely interested, from what we understand, according to bankers, is the ICE, the Intercontinental Exchange, which obviously owns the New York Stock Exchange, where Nicole broadcasts every day.
And the CME, and the NYMEX.
Right, and the Singapore Exchange. That is the other exchange. It'd be very interesting, the Singapore Exchange, which has cash, from what I say, comes in and buys this thing. We should point out that here is one of the sticking points of this deal, and this is interesting in the context of Brexit. Brexit is screwing somewhat with the valuation of the London Stock Exchange. If there is a Britain exit from the EU, makes sort of cross-border deals a lot more difficult. Well, guess what? That could have an impact on the number of stocks that actually list on the London Stock Exchange, and
it becomes less
valuable. So that's what bankers are doing. They're looking at this thing, and they're trying to figure out for an American exchange like the ICE, Intercontinental Exchange, or like Singapore, they're trying to figure out exactly how much this thing is worth given what's going on with Brexit. So here's the upshot. A lot of people said there would be no impact of Brexit. I'm not saying there's broad impact, and just this one deal shows that that Brexit was a bad thing. I actually personally think Brexit was a very good thing, but it does have an impact, and it's having an impact on the valuation of the London Stock Exchange as. From what I understand,
the UK pound just hit a 12-day low, but putting
it speaking or before?
12-day low, but
right.
It's lost about a fifth of its value since Brexit. So there are a lot of intertwining issues
ramification. I will say this: these exchanges are interesting. Why do we care about them? Well, guess what? You want to have your, first off, the markets are global now. Let's face it. You want to buy a stock, you want to make sure you get the right price. You want to make sure you get the right execution on that. These exchanges and who owns them is a big thing. And here's the other interesting thing about this, I believe, is that it just shows you what's going on with European regulators right now. I mean, Deutsche Börse, I believe, tried to buy the New York Stock Exchange, correct?
They sure did.
How many deals ago was that? I almost forgot. These European regulators are doing the exact opposite of what the U.S. regulators are poised to do, which is approve deals.
They're becoming Dow and DuPont.